Why is retirement a problem in India?
Old age poverty is increasing, social change happening, people are not living or supporting their parents back as much as they used to do.
When people look at pension as a topic, they always look at 401k plans.
There's an option for government employee to have a unified pension scheme, and then private employees also have a version of new pension scheme for them. It also becomes a vote bank for governments to look at.
What is the pain point that you guys saw?
Problem was to solve for retirement, right? PF katta to hai, but jata kahan hai? So tracking your PF digitally and seeing how much money is there do retirement benefits better.
In EPF, you put the money in and you get a return. And whereas the NPS, I have a choice to make investments, equities, government bonds, corporate bonds.
Government came up with a new tax regime where there was no bracket for investments.
Instead of incentivizing long-term savings, the government is actually disincentivizing.
Now there's a catch. The same NPS, if a company does corporate NPS for you, you get the tax benefit even in new tax regime. But if an individual does it themselves, they don't get it.
Now I've retired. Say I want to withdraw money.
40% of the money will go to annuity, which generates recurring pension. The remaining 60% that you have, you can withdraw that money lump sum, or you can create a SWP on the 60% remaining in the NPS corpus.
Rainmatter invests in FinTech startups with the intention of investors doing better with their money, which we believe will also help deepen markets in India. Join us as we speak with the startups and venture capitalists who invest in them about how they are approaching markets, fintech solutions, in all subsectors of lending, payments, investments, insurance, and infrastructure, as well as their businesses from scratch.
Yes. So we are in the Rainmatter studio where a bunch of startups work out of, and the office there is basically where they work. Welcome.
Thank you so much for having us.
I always love to understand what is the pain point that you guys saw that led you to become a founder. So what was the problem that you saw?
So first of all, we are brothers. He's the tech guy. I'm the guy who talks, who does the product. The problem that we saw was basically that we wanted to solve for the retirement.
Is a whole.
We started doing something, exploring about what the retirement is, how the retirement planning works, what problems are there, what options are there. Eventually started doing something there. So in a nutshell, if you see, we are solving for retirement planning in a way. We are trying to bring tech into this particular ecosystem and bringing more awareness in this particular part, and the way, whatever it takes to do it. And we do it both the ways, tech and product, majority.
And why is retirement a problem in India?
So traditionally it was not. If you look at the traditional way of doing it, it was more like a family thing. So at least used to be taken care by the sons and daughters of the family. As we have moved towards a nuclear family structure, people are more independent. There's social change happening. We have seen that people are not living or supporting their parents back as much as they used to do in the back. Right?
That's anecdotal, right?
Yeah.
I mean, are there any government stats that support that assertion?
There are surveys done from multiple agencies talking about how much the elderly, so old age poverty is increasing, which is one of the factors where people are not having enough money when they're old, but they had money when they were young. So there's one of the factors, and one of the factors are social. Apart from that, there are multiple factors of not having enough social security, not enough having pension in the space, right? So multiple factors to it. But then we decided, okay, these are a couple of things which are the major problem causing people to retire without having enough money. And that was a major problem that we don't want our users to have. Like, you should retire with enough money in the bank and then stay independent in a way. So this is, again, long topic short, but there are multiple factors to it.
And why is that a problem in India? I mean, apart from the family breakdown, so are they who's stopping them from saving for their retirement?
So they do. It's not like they don't. They majorly used to invest in houses, properties, rental income used to be there, right? So Indians are very good at saving, and especially for the long term. So my father's generation is the one who held all the wealth, right? I don't have the house, but they do. So they build their wealth throughout their life. There are multiple factors. One of the key factors was not having enough backing when they're old from the government side, which is social security in a way. So if in case you don't have money, let's say you not were able to save or depleted due to health or anything else, right? There's no backing from the government side for the people who are privately or self-employed in a way, right? That was a major factor. And especially when the money part comes and there's a financial crunch, obviously family gets divided to the family part of it. There was one major sense where there is no one else taking care of your retirement. You have to do it yourself, right? And people were doing it for a longest period of time till things started to change in a way. and then savings depleted. In COVID, a lot of savings depleted as well, right? And those savings were basically your retirement long-term savings, right? So these are a couple of factors to look at.
When people look at pension as a topic, they always look at 401k plans in the US. And you also have experience in that, right? You work for Fidelity there.
Yes.
For someone who's not aware of how the Indian pension system works, could we perhaps just do a summary? So what used to happen and what currently happens? Perhaps just explain.
They decided to bring in new pension scheme, which is your moving away from old to new. So now there's an era where, like last years in a way, where government employees used to have new pension scheme where everything is defined contribution. So only the money going in is defined, and then money getting implemented and everything. So benefit was not defined. You were not having definite payouts in a way. So government employees get covered in the new pension scheme, and then private employees also have a version of new pension scheme for them. Again, private employees or self-employed had their own ways. The real estate, or let's say you have mutual funds, and plus NPS also for private guys. Recently, due to the multiple things happening across, because pension is not just a financial thing, it's also becomes a vote bank for governments to look at. They also talk about, okay, there was multiple dharnas, everything, one gold pension scheme to new pension scheme. They introduced unified pension scheme. So from 1st of April, which is like a couple of days back, there's an option for government employee to have a unified pension scheme, which is basically a mix of old and new. So in short, government still have some payouts to make in a long run, but there's some money to be paid out, like a DB and a DC kind of a mix for the government employees. When it comes to private employees, they're still in the phase where they have to figure out their own. They have to do their mutual funds. There are multiple options for them to do it. And again, the same NPS is. So National Pension System is a defined contribution product, very similar to 401k and many other parts of the world where DC works, right? And it is in NPS, there are 3 major players. One is your pension fund. So there are about 11 pension funds or 12 pension funds in India who manage the money in the NPS structure. One person is the Central Record Keeping Agency, which is CRAs, who keeps the bookkeeping, they keep all the records. They also give people opportunity to make sure that everything happens online. So all the APIs and everything is run on the CRAs. And third entities are POPs, which is point of presence, which is like us, who enable users to do it more easily, give options to service the end user in a way. NPS is a combination of these 3 entities and a structure where you put money in, you choose a pension fund, whatever pension fund you like. So first,
Money and how? How do you actually?
So the first step is to open a NPS account, which is your PRAN number, permanent retirement account number in a way. Once you open that account, you choose which pension fund you want to choose out of all the 11 pension funds that are there. You also choose what percentage of equity allocation that you want to keep of corporate bonds or government securities that you keep. And then you complete your account opening process. The first step is your opening of your NPS account. That's one, where you involve each of these entities. Like you choose a pension fund, you choose asset allocation, there will be a CRA allocated to you, and there will be a person who's you dealing with will become your POP, right? Once that is created, then you can put money in both the ways. You can put money in lump sum, you put SIP in a NPS part, very similar to a mutual fund. And then every time you put money in, you get certain tax rebates under certain categories. But that's how you make investment in your national pension scheme accounts.
Okay. And the way NPS is different from EPF, or why someone would even consider the NPS compared to an EPF, is that the underlying investments, the investor has a say in. In EPF, you put the money in and you get a return, which is defined by the EPF trustees, right? Which is basically the government. And whereas the NPS, as a user, I have a choice to make investments, not only in different asset classes. So 3 asset classes it got launched with, right? Equities, government bonds, corporate bonds, and now there's alternatives, right? So there are 4 asset classes. Correct. I can choose a combination thereof, which means that the returns are dependent on what I choose, right? So I as a user can participate in the equity returns of the country, right? If I want to make a long-term bet, if I feel like other people are making lots of money and here I was getting government bonds, I can go and choose that, right? That was the main reason why NPS got launched, to give investment choice and fund choice, which is which fund manager, to the users, right? That's kind of the main thing.
Yeah, and later if you want to basically change that after 1 year, then also you can change the PF. Basically, the manager you can change after 1 year, and equity also you can allocate.
So as a user, I can change the asset allocation and or the fund selection. Who is a CRA and who is a POP? Like what kind of entity?
So there are two entities, which is CRA, which is Central Recording Agency, which is the person who, or entity basically, who
It used to be the government only, no? CRA was only one government CRA.
no. So right now there are 3 CRAs. Should be one, but again there are 3 CRAs. All 3 CRAs are publicly listed companies, which is FinTech, CAMS, NSGL, which is rebranded themselves to a Protean in a way. And these are private entities, which is as company as it can get. So there are no government companies as such who does this. So these are the CRAs. Their job is to make sure that they build all the APIs, they build the infra, they build the basic layer of getting things done. They also do the record keeping of how much money, who's the subscriber, issuing of the brand. So CRAs are the ones who make sure the record keeping happens. And used to be one, but now there are 3 CRAs in the
The equivalent of that in the mutual fund space is?
I think
The depository?
depository could be, yes, depositories.
Okay. So that's the central record keeping agency. I, as a user, do I have to deal with them?
You have to have only one CRA with your PRAN. So your NPS account can only be linked to one CRA, a one POP, or a one pension fund. You cannot have 2 CRA. CRA is the one who issue your PRAN number, right? So it has to be only one who issues your PRAN.
So if a user basically...
Why do I deal with them? Do I open my account with the CRA directly, or is it through a point of presence?
Both the options are there.
Yeah.
You can also go through the POP, and you can also directly go to a CRA and does this.
Okay. But I don't walk into their office and do it. I go to their website and do it.
And portals.
Okay. So portals do it. Talk me through POPs. What kind of entities are POPs?
So POPs are very similar to mutual fund distributors of, let's say, mutual fund. So POPs are point of presence. These are the entities which deal with the consumer or the subscribers directly. They make the onboarding process easier. They help you make the choices. They help you do all those stuff. So very similar counterpart to a mutual fund distributors. POPs are the point of presence for NPS.
So they're basically like a distributors.
They're basically like a distributors.
What kind of entities are POPs?
So POPs can be any entity which is a FinTech or let's say a financial services company or any company who's already doing mutual fund. They'll get another POP license also.
And that's what you have.
Yes.
Okay, so we'll talk about that. But you have a POP. You are a POP. Today you are a point of presence for the NPS.
Yes.
Right? Okay. And the third entity is pension fund managers. Now they, when the selection happened in 2009, there were 6 of them. Now there are 11 of them.
Yeah.
What sort of products do they offer? What is listed on this NPS?
So there are about 11 pension fund managers. The investment choices you can have majorly divided into 2 parts. One is active, where you can choose percentage as per your own liking of the 4 categories. One is our equity, which is capped till 75%. Then you have your corporate bonds, government securities, and AIF.
And there's no caps on these other ones?
So the government bonds, government securities and corporate bonds do not. They can go up to 100. There is a cap on AIF up to 5%.
Okay. So basically the caps are in the risky categories, 75% in equities
Yes.
and 5% in alternatives.
Yes.
So if I do an active choice, they are my caps. Otherwise, I can select any asset allocation.
Correct. So these are the caps, and between that you can mix and match, does the whole 100% in a way. So the first choice is your active. You can actively choose whatever you want to choose. Second mode is your auto. In auto, basically there are 3 default settings that they give you. So they give you L75, L50 and L25, which basically means 70.
What does L stand for?
I think it's just the settings in a way. So it's 75% of the equity, limit in a way, limit out. I'm not sure it's limit or not, but it's 75% equity, which is default setting, 50% of the equity, and then 25% of the equity. So these are for the people who do not know how to do active on their own. They can choose a default setting in a way, which is 75% equity.
Okay. So these 3 correspond to what people know generally as the risk profiles, aggressive, balanced, and conservative, right? Okay. So basically, the government is giving you a choice of, or either you can choose, if you know what you're doing, you can choose. If you don't know what you're doing, you can pick a one of three risk profiles.
Correct.
Perfect. Okay. Now, say I choose active. What about the pension fund managers? Out of the 11 pension fund managers, how do I know which one to select?
So ideally, you should look at all the data. Very similar to choosing a mutual fund, right? How do you choose a mutual fund or any other product?
So these pension fund managers are active?
So they are kind of follow the index in a way. Their returns, if you look at, they're
passive.
actively managed. Reason being there too, the fees are comparatively low. Also, they do not have actively managed fund.
So they're all passive. So then they're all passive.
They are all passive.
Okay, so if all of them are offering passive, why would I want to choose among them? I mean, I can do a blind dart and pick any one of them and that should be fine?
So there's one recently came in, which is DSP. They started doing it actively.
Oh, so it's allowed?
So it's up to you. How do you manage in a way? There are certain restrictions to pension funds as well. Like this is how much you want to do. You want to keep the large cap only on the equity side as well. So there are certain regulations for them to manage, but up to you whether how you want to manage in active or passive. Generally, all the pension funds used to do it passively because there's no money to be made. They can't afford the salaries and whatnot as per them. But there's another fund which came in recently and they have made a huge difference in the returns in the last 1 year. And they started doing it more actively than passive. So the approach so far was more passive, but only for one fund started doing more actively.
Okay, and are the fees different in terms of different pension funds?
So not as a fees is different from pension fund. It is different from the AUM that they have. So let's say there's a new pension fund come in and they have a small AUM as of now. The fees is comparatively higher. As the AUM increases, the fees decreases for a pension fund. So let's say SBI is one of the largest pension fund. Their fee is 0.03 in a way. But if you look at the DSP, which is the newest, their fees could be 0.03. So that they compensate equally on the AUM side. But it's divided into slabs as per the AUM. As the pension fund grows larger, the fee on the AUM tends to be smaller.
Okay. And can I select multiple pension fund managers in my portfolio?
Now you can. Earlier you not used to do that, like one pension for all the schemes. But now you can choose equity is handled by some X pension fund. Corporate bonds can be handled by something. So each of these schemes can be allocated to each of the pension funds.
Right. Okay. So, and say, for example, I put in a lakh. We discussed pension fund fees. Yeah. Now let's just discuss the fees on the point of presence as well as at the central record keeping agency level.
So if again, as you said, pension fund is one fee, CRA is another, right? And then POP is 3 level of fee structure that are there. And all the fees are transparent. Maximum time they are very low, keeping the lowest product for pension and retirement in the world. Pension funds 0.03 to 0.09 depending upon the AUM that they have. On the CRA side, there are 2 types of fee that they charge. One is the account opening fee, which is basically 67 rupee for generation of a new brand. The second is, and also this can vary little bit in the range for the 3 CRAs that you have. A second is whenever you make a transaction, there's a transaction fee, right? So depending upon, let's say you make a transaction, you have certain, let's say 20 rupees on the transaction fee that you make. And these are the 2 fees for the CRA. Apart from that, when you go through the POP, if you're going through the POP, not the CRA, then you don't have to pay the CRA fees. So whoever you open up the account with, you pay the fee there. So let's say you go with the POP. POP will charge you somewhere about 200 to 400 in the account opening fee and a subsequent transaction fee, which is 0.25 to 0.5. So let's say you're making a transaction of 10,000 rupees. The fee could be 25 rupees to 50 rupees on the transaction fee side. And if you open a new pension account, then it's up to the POP, whether 200 to 400, whatever amount that is.
Okay, so as a user, I'm going to either a POP or a CRA, and I'm paying one of the 2 fees.
Yes.
Which is sort of the service that they provide, depending on hand-holding versus CRA.
Yeah.
But when I go to the POP, aren't I getting issued a PRAN number? And who's issuing that?
So POP works with the CRA. So at the end of the day, CRAs are the one who...
But I still have to pay that fee then, therefore, no?
I don't. Not to them.
No.
So when you go through the POP, you basically deal with POP and go through, generate the entire thing. When you go to the CRA...
So the POP doesn't pay the CRA behind the scenes?
No.
Achha. Okay. Okay. So say, for example, I put in a lakh of rupees. What does my expense ratio add up to?
I think if for a lakh, depending upon if you go to a POP or a CRA, it generally.
Give me both numbers.
So let's say you go to the POP and POP is charging on the higher side, which is 400 and 0.5 in a way. So you will pay 500 on the transaction plus 400, which is 900, plus the pension fund manager fee, which is 0.03, depending on which pension fund we are there. Comes up.
Yeah, they're most expensive. So how much does the expense ratio come up to?
The expense ratio will come up to about 0.3.
0.3.
0.3 total if you go to the POP and the pension
Wow.
fund.
Okay. So that still makes it the cheapest pension system in the world, probably.
Even if you go to the POP and then go to the CRA and then go to the pension fund side, if we directly go to the CRA and then do it from there, they will also charge you a similar fee. But again, the expense ratio will be very minimal difference on the part, which is more 0.23 or 0.24, because the majority amount comes from the AUM basis and then your individual charges that you pay.
Right. Okay. That begs a question. I mean, why do more people not put money into the NPS? What do you think is the issue? I mean, it seems like the cheapest thing.
Yeah.
It seems like it's well managed because you're giving me passive sort of funds. So there's not that much confusion in terms of selecting funds.
Yeah.
I have good diversification of asset classes. It seems amazing. Like, why are there no more noise and awareness of the NPS?
So there are multiple reasons, but top 3 reasons are: one, that there is not enough marketing effort comes from the higher level ups. If you look at mutual funds, you have MFI doing mutual funds in every corner and everything.
Because there's a mutual fund association, right? AMFI is a private entity. It's a
Correct.
Yeah, it's an entity. There aren't enough pension fund managers, and they're the same entities anyway.
Yeah, they're the same people who are like ICICI pension fund versus ICICI mutual fund in a way.
be doing the marketing for NPS?
So I think the initiative should come from the higher level up. That is PFRDA, Ministry of Finance. You bring in something, but you don't promote it. The word goes out. Hardly anything people know about it in a way. Even if people know about it and there's no enough money to be made from the pension fund side or a POP side or other sides as well, people will not promote it. So let's say from a distributor point of view, I have one product which gives me more money versus one product which not give me more money in a way, right? From a very human psychology point of view, if I'm a distributor and I look at both the products, I'll say, boss, get this thing done, right? And I'll only tell you to put 50,000 to get tax rebate done, right? So that's how the NPS got famous, because 50,000 dalo and then you are done with this, right? So that's how they became famous. It's a product where you put 50,000 every year, get the tax rebate and forget about it.
So it was the cheapest system, and it was sort of getting a tax sort of incentive. But the latest budget took that away as well. So talk about that. What happened?
So in the recent budget that has came in, new tax regime is much more beneficial for people to opt in.
Okay. For someone who doesn't understand old, new, explain.
So again, in India, multiple things have old and new things coming up, right? So we have old pension and new pension. Similar way, we have old tax regime and a new tax regime, right? So old tax regime, imagine that's where they used to give you maximum rebates for investments, to getting a house, to saving for something. So they give you incentive for making investments and savings, right? And government used to say, okay, you are earning 10 lakhs and you're investing 2 lakhs in something which is good. You get rebate for 2 lakhs and you only pay taxes on 8 lakhs. That was the classic example of an old tax regime, right? Now government came up with a new tax regime where there was no bracket for investments. So they basically said, okay, boss, you don't want to make any investments. You pay taxes on the entire 10 lakhs, but these are the different slabs, right? So 2 different slabs that came out. One for the people who wants to make investments, get the tax rebate and then pay taxes. Second, for the people who do not have to make any investments, just put whatever you're earning, pay taxes. This is a new tax regime, right? Now the things which is in a larger perspective, the people who are choosing new tax regime wants more in hand money in a way, right? They don't want to make investments. They were like, whatever you're deducting, and then I'll get the whole money and spend it in a way. So government is pushing new tax regime more so that people have more money in hand and eventually spend more in the multiple things and go forward, and whole things changes in a way, right? So promotion happens on the new tax regime. Old tax regime becomes very unattractive right now. If you look at the new tax regime, you pay way less taxes even if you're not making investments. compared to the old tax regime. So many people are shifting from old to new to basically pay less taxes because there's low taxes in the new tax regime now. And there is no benefit for ELSS, PPF, EPF in a way, or the EPF is there for a limit, but PPF, ELSS and then NPS, the self-contribution, the 50,000 contribution that people used to make, the way NPS picked up was 50,000 tax rebate, right? That is not there in the new tax regime. So many people who are choosing new tax regime will not make 50,000 or more contribution in NPS this year or going forward.
Okay. So basically you're saying that instead of incentivizing long-term savings, the government is actually disincentivizing by not giving a tax deduction for these long-term savings.
Yes.
Right. Okay. Now, so this is kind of the context of what has happened over the last 10 odd years in the retirement sort of scene in India. Now, in that, sometime you launched a business.
Yes.
Okay. So now let's sort of change gears and understand that. Why did you launch that business? What is PensionBox? Firstly, explain.
So PensionBox is a platform. It's a tech platform where we help individuals and companies do retirement benefits better, be it from a company side, be it from your own side. You plan, you invest, you track down, you basically withdraw in the end of the day and digitalize the whole retirement planning journey. So be it come from a company or be it come from yourself, both the things work on PensionBox. So we are the platform who takes care of retirement planning end to end.
Okay. And in the hierarchy that you explained, CRA, POP and pension fund manager, you are a POP. It's a license. You are a licensed entity.
Correct. So we work as a POP. We we do all the services that a POP does, but we do everything from a tech side of it. So we do everything digital end to end. We do not have anything offline as such. Even if something was offline prior, we try to digitalize it, try to bring some more convenience to the process.
Okay. List out all the services. What all does a POP do? And therefore, what do you do?
So generally, maximum of the times in the industry, if you see all the POPs, they do not have their own tech stack. They get a referral link from a CRA and then pass it on. Okay, just do your own bit and then take it from there.
So they're basically the hand holding, but they're using the infrastructure of the central of the CRA.
Yes. But what we did was we built our own journeys, keeping in mind whatever the pain points that you have, opening a new pension account, transferring a pension account in a way. If it is inactive, how do you make it active again? So multiple cases that we start picking up. But if I broadly say it, one, if you want to open up your new pension account or if you want to track down your existing pension account, which are like lying somewhere here and there, we help you.
Meaning NPS, not EPF.
Not EPF. So we help you out. So we also track down PF in a way because this is all part of your retirement savings. But from an NPS perspective, you can open your NPS account fully digital without any paper within 2 minutes.
2 minutes.
Yes. And you can choose any pension fund as you like. There are all pension funds with the available data of last past returns, who's the pension fund manager, everything, choices on the part. So within 2 minutes, you can open up your pension account on PensionBox without any problem. So that was the one thing. Second, what we have seen is that there's a new product which is NPS Withdrawals. I'll talk about it later. But if you want to open up for your kids, you want to open up for yourself, both things happen within 2 to 3 minutes. Second, if a company wants to do it for their employee, wants to enable the flexi benefit of NPS for their employee, that also happens on PensionBox within 24 hours. So we have a dedicated team to make sure that if a company wants to do it, then we make it enable also. So from a company to an employee, both things and the multiple scenarios where let's say you have a PRAN number that got frozen last year and now you are just looking to increase it or defroze it or you want to make some investment, make some withdrawals also. Come on PensionBox, track down your PRAN number. We'll tell you, okay, your account is frozen. These are a couple of next steps we'll do together and get it unfrozen. You want to make a partial withdrawal, we'll help you make a partial withdrawal as well. You want to do withdrawal from your tier 2 or tier 1 account, we'll help you do that. So end-to-end services when it comes to NPS from an individual perspective, also from a company perspective, both the things.
Okay. Okay. Shivam, maybe I bring you in now. He's been talking a lot.
He always does.
As he always does. Because he's your older brother as well, right?
Can't talk.
Okay. So tell me, what is involved in setting up a product like this? So basically, the pension system, as you described, sounds very complicated. You're dealing with the government not government, but sort of very old semi-government type sort of people. Yeah, so it's complicated from what we were discussing. It sounds complicated. Okay, so I, as a young user, even old user, don't want to understand. So how do you design a product where you execute with all these people at the back, but then also users at the front? Talk me through the design journey.
So on the design journey, if I ask, basically in the starting, I already completed one project from end to end. So I know how to build a thing, how to basically scale a project. So earlier I have done like a project which I think 2 million or 3 million. It's a USA project. So the users count, which is actually the traffic count which is there, is like 2 to 3 million users. So I already know how to scale a product. So in the starting, we have a guy from the UI UX who basically in 12th. So that guy designed our UI UX. So once that is done, I think three only, me, Kuldeep, and that guy. So only three guys are there in the initial phase.
Nishit,
Nishit.
the part-time guy.
Yeah. So Nishit.
Still in college.
So he's still in college. He's doing his BTech. So we only three guys. He's done the UI thing, and I have to do it in 1 day or 2 days because the time is the only key which we have. So
So you decided the USP that you want to offer is a quick
thing.
the time saving.
So my USP always the execution. So once Kuldeep give me the requirement or anything, I have to do it better and faster. Who is the competition? I have to look into the competition also. So I have to execute and make the product live as soon as possible. Whether it is 10 days or 20 days, like Vatsal, as Kuldeep told you. So that we have done it because everything goes along, right? The marketing, everything will goes once the product is live, right? So I have to look into that perspective. So that is the thing. So execution side, I think I have done it in 1 month. In 1 month, I have completed the demo and everything to basically showcase to everyone. Okay. So, and the integration part also, as you told the government, right?
So what's the product? So say I as a user,
Right.
say I'm a small company and I want to open an NPS account, a corporate NPS account for my employees. Say, for example, I have 100, 200 employees, whatever. What is the journey? Like, do you interact with the HR people? How does that work?
So point of contact is always the HR or the finance guy in the system. So we will contact them first, and I think it is like a 3-step process to onboard. We just need a name, and we have the APIs to basically to verify everything.
Name of whom? The company or the employees?
Company. So we first verify the company, and we will provide a portal to HR or admin, you can say, where he or she can add employees. Basically, he need to add the employees, the details of every employee, and the contribution part also. Whether employer wants to do it or the employee wants to do it, the contribution part. So once that is decided, we can go forward. Every month we have a cycle. So every month, as per the contribution, employer or the HR can contribute on our portal. So whether it is 100 employees, 200 employees, it is a one-time payment which will go along with the Zerodha, and after that it will go to because Zerodha is our POP. Means we are sharing the license, so that's the thing. So once the money goes from HR to Zerodha, it will go to the CRA. So this is how it is.
So when you are sort of building the product, what sort of tech challenges do you have to face?
On the tech side, I have to basically think about the structure. It should be scalable. Right now it is for 2 lakhs, right? After that, it will go for 10 lakhs also. And for
2 lakh users, you mean?
2 lakhs users. And right now it is for 2 lakhs active users. And after that, it will go to 10 lakhs. And after marketing, it can go to 1 crore and more. So we are deploying on AWS, and thanks to Rainmatter also, because they have given us 1 lakh AWS credit, which is from last three years. We are in tech side, we are running on zero cost because of the AWS credit. And if that is not there, it will be like 2 lakh or 3 lakh, something like that. So the tech cost is zero from our side. And we are using AI APIs also to basically make everything is possible, because after 10 lakh users, right, you need some AI bots to communicate. We don't have too much big team. So that also I need to basically think about it, because 3 to 4 guys can't control 5,000 users, right? So on that side also, I wish.
Where do you see the pain points coming? Is it when opening the account, or is it ongoing questions from the users? Like, where are you seeing people wanting to interact with?
See, opening an account is actually very smooth, because in initial phase, if you go to any government website, you can find 20 minutes, okay, in NSDL, because they basically ask you about the document, different document like signature. Signature, you can do it in your mobile, right? We have just do it in the mobile. It's a pad. So signature and the other document they ask about, like cancel check, cancel check. See, cancel check, that is a pain point. Okay, if you want to basically open a account, right? Cancel check is a thing which we are discussing with government to basically skip that part, because that basically the document part is actually pain point. So that we have done it in 3 to 4 minutes, the opening round, basically to modify the APIs which government does provide us. So I only basically modified that. I basically think about it, how we can make it possible, fast as possible for the user. So I autofill everything. So whatever the data I am getting from the government DigiLocker, DigiLocker is basically a platform where user store each and every information. If you have a license from the government, you can basically extract every information. So
What license do you need for that?
You have to be partner.
So you will partner with PFRDA.
Do the KYC.
Yeah. So
One answer. Yes,
yeah, you can go ahead. So if you are PFRD license and you have a POP license also, then you can basically apply to be a partner with government, and they will basically provide you the access, which is free of cost. So that is free of cost KYC. You don't need to provide any, not basically you need to give any.
So if you have a POP license, which you do,
Yeah.
you have access to all the documents that are in DigiLocker. So you are extracting the information and filling out your forms, information, not just a PDF, information directly into your account opening process. Is that
Correct.
kind of understood?
Yeah. So which make, because the fields are like, I will say more than 100.
What are you saying? Really?
Yeah.
To open an account?
To open an account.
100 fields.
100
To ask what? What do they need to know?
So everything means you are married, unmarried, or what means anything.
Details to bank verification details. So
The address fields are like too many, means I will say 6 or 7 fields, more than that. So they ask. So the steps are like 5 to 6 steps. If you ask anyone how you open the NPS account, then he will tell you how painful it is.
So if I go to the an NSDL website, we're just picking on them.
Yeah.
If I go and open an account there, how long does it take there versus on your site?
So I say 5 minutes on my side, 5 minutes. Okay.
Hey, he said 2 minutes, huh? You said 5 minutes now.
depending on person.
Depends upon the person, because basically I'm considering
Guys, that they.
yeah. So basically, I'm considering the time where he needs to choose the fund manager.
That's
right?
a decision making process.
Yeah.
Choose that.
That part. So
it takes 2 to 5 minutes on
so 20 minutes, I will say 15 to 20 minutes. I ask many guys, so around 15 to 20 minutes, if I say.
to other places.
To other places, government.
So now,
Yeah.
let me just understand this. So
Yeah.
it takes, say, on average 20 minutes on an NSDL site.
Yeah.
It takes, say, 2 to 5 minutes on your site.
Yeah.
Is it really worth, am I really out there to save 15 minutes of my time? In the scheme of things, it doesn't sound like much.
Why we
Like
use
3 hours or 3 days versus 2 minutes, right?
so
20 minutes versus 2 minutes.
why we use
So it's basically you start somewhere and you save. It's just not the journey of opening the account, but that's a foot in the door, right? Like you first make it the first thing easy, which is opening your account, which is as simple as it gets. Once you make it easier for people to open the account or access their accounts if they already have it, then it becomes much more easier to go the next step, which is investments. Let's say you want to do more withdrawals, right? So the first step.
Explain that. What do you mean?
So what I mean is that the first step is obviously opening the account. And when we tried the traditional ways of doing it, we found it that this is not exactly what I would want to do. So we make it easier at the first step where you open.
Understood. You open the account. What do you mean by investments?
So once you open an account, the next thing that any user will do is make investment in NPS, right? Every year they make investment, or let's say they make SIP in the way that they want to make investments on the part. So, or let's say they want to do withdrawals or they already have accounts. So the first version that Shivam shared is opening the account.
Okay. If I'm putting money in, what is it that value? What value are you adding?
So we do. So when you go out there, you have to choose every time a pension fund as the asset allocation and then put money in.
I have to choose every time. So when I put money into my account, you're saying when I go to a NSDL or any other thing, every time I put a contribution, say I put 10,000 rupees today, and say I put another 10,000 rupees in 6 months' time, are you telling me that each time I have to choose the investment, asset allocation, and the fund managers?
You have choice every time that you go about doing investment. They will show you the pension fund. They will also show you the asset allocation, and then you put money in. And at
Every contribution I can change.
If you can. They'll show you the pension fund, they'll show you the asset allocation, and then you put money in.
It's a good thing, no? It's a very good thing, right? So if today I can put into, say, equities because markets are crashed, next contribution I make, I can put into bonds. I can do all of that, right?
So you can only do it twice a year in a way, but you'll still see the same process. And again, for a person, let's take an example for a normal person to look at. It's again 2 decision making before you make investments. So you already asked him to do a decision making for about 15 minutes, open the account, choose a fund manager. Every time he make an investment, you have to make 2 more decisions every time you do it, in a way. So,
And in your case?
in our case, you choose a tier 1, tier 2, whatever, then you want to put money in. Choose money and then make SIP, delete SIP, pause SIP in the NPS part of it. Knowing that this was a backend you already had, the first step which was earlier, here the settings are already saved that you have done.
So put the money,
Settings of asset allocation.
So both the things are.
put the money, do the payment, that's it.
Okay. So that's the contribution part. What about withdrawing? Say I want to withdraw money. Now I've retired and I want to withdraw. Now in NPS, tell me how the withdrawal works.
So there are 4 types of withdrawals. One is your partial withdrawals, which enables after 3 years. So you can withdraw 25% of your contribution that you have done 3 times in 3 years in a way. These are partial withdrawals. Let's say every 3 years you can, for some other reason, let's say health or education or whatnot. Second is your premature exit that happens after 5 years. So after opening an account to the 5-year time frame, let's say you want to close down the NPS part, you can do a premature exit where 80% of the corpus goes to annuity and then 20% of the corpus comes out lump sum. That's a premature exit.
Say now I've got to age 60 and I want to take my money out. How does that work?
So right now there's a process to close your NPS account. At the age of 60, you have option to keep your money invested or you can take a withdraw, right? So in the withdraw part, you can, when you withdraw from your NPS corpus, 40% of the money will go to annuity, which generates recurring pension.
Will go to annuity, meaning I have to buy an annuity.
Yes.
From a life insurance company.
Yes. So all the major life insurance companies are also annuity service provider. They call themselves ASPs, but they are basically the insurance companies. And from them, you can buy as per your choice of, you want to buy from SBI or LIC, whatnot. You can buy annuity of the 40%, right? Remaining 60% that you have, you can stay invested over a period of time. Let's say you don't want to withdraw that money. You can withdraw that money lump sum, or you can create a SWP on the 60% remaining in the NPS corpus. So this is the 2-part withdrawal, and we help people out in that phase as well. So once your things mature, you want to do a part.
How do you help? Like, how does your platform sort of make this process easier?
So we this requires a couple of forms to be signed, filled physically. We have made it all digital and made requests on the platform. So you can create a request saying that I want to withdraw, attain the age. We do verify the first set of documents and then we help you, handhold you to make these exits. And this process generally takes a lot of time because it requires a physical forms to be filled. We pre-fill that data, as Shivam said. Once you do a KYC through DigiLocker, the data you have, your data is already on the PensionBox on the CRA. We pre-fill that data. All you have to do is a digital signature and then your form is filled instead of printing it, signing it, do it another thing. And then we help you out with the process of withdrawals.
Okay. Just sticking on the product still, on the tech side. So all of these things you're saying that require integration, as you said, with DigiLocker, as well as with
The CRAs.
TRAs?
Who else?
I think
Venture fund managers?
not really.
Not really.
You don't have any integration with them.
We, as an independent platform, we do not, and also the right thing to do is that we not go with only one or two. We have to show you all the pension funds that are there to give you the option to that.
I understand that, but do you have to integrate
We don't have to.
managers?
We don't have to.
No.
So where does the data come from?
Data comes from the CRA.
CRAs have the API.
And every POP should offer all managers, no? I mean, that's a system, right?
We do not.
What are you saying? Really? There are people out there who don't offer all managers?
So when you go to the other POPs or other platforms in a way, they will give you a default option first. So there will be two screens. One will already selected a pension fund which they tied up with.
What do you mean tied up with? The system offers 11 fund managers. Are you telling me that there are people who are not offering 11 managers?
So what they do is they have two screens. One screen with all the 11 pension funds, which is the second screen. First screen is where you chose a default already selected. So how generally it works is that if you already something is selected, then people keep it selected and move forward, right? So they keep one as a default selected for you, which they tied up with. It could be anyone. And then in the second screen, they have multiple options. If you want to change it, you go and see all the options and change it, which is also not right.
Okay. You don't do that, right?
We don't.
You are offering all managers. So these are the dark patterns that people talk about, like selecting something,
Yeah, something loopholes in a way.
direct the money to a related party, I assume, right?
Right.
Yes.
Okay. Okay. So in terms of tech, you don't have to integrate with the pension fund managers. The data feed automatically comes via the CRA. So in the back end, you are integrated with the CRAs.
Yes.
All three CRAs, or you choose one?
We choose one.
So every POP ties up with one CRA.
They can tie it up with multiples, but from the concept of CRA, it has to be one. From the concept of a CRA, there's a central recording agency. Even if it is not there from an ecosystem perspective, we try to keep it one so that in future, anything happens, anything that we want to get it done, we always do interact with one and get our users at least a centralized way.
Is it possible for any user to be registered with multiple CRAs, such as like the depository? If I've invested in XYZ mutual fund versus whatever, ABC mutual fund, I have different depositories, right? Here, is that possible? Because I only have one PRAN, right?
One PRAN, one CRA.
So I am, as a user, I'm only ever dealing with one CRA.
One PRAN, one POP and one CRA. And if you're, let's say you opened up with Protein and you come to PensionBox, we'll tell you, okay, your PRAN belongs to Protein and we work with FinTech and we do this all thing digitally. So why don't you move your CRA to?
So I, as a user, I can move from one CRA to another CRA.
You can also move from one POP to another. Let's say you opened up your account from SDFC Bank or SDFC Pension Fund in a way, and then your POP will be SDFC Pension. You can move to us, then you go. Then it's a simple single-click process to do.
Okay. So now that we've understood the whole pension system in India, okay, let's switch gears again and understand where the company is at. So you saw the retirement sort of issue, and you decided to do something about it and start a company. When did you decide to do that?
So I decided it first in 2021. I quit my job. I gave myself about a year's time to figure out what can be done in this particular space. In 2022, Shivam decided to quit the papers and we officially started in 2022.
The company was set up in 22.
Yes.
Okay. Okay.
So we about like 3 years now where we have started the journey, started building the whole part and then look at multiple scenarios to do it. But about 3 years now, right?
Okay. And how did you start? Did you bootstrap it?
Yes. So I was working for Fidelity Investments. I saved up my money from my salary. I had about like 6-7 lakhs rupees in a way. And I've projected for about a year, we'll need only this much amount of money to set up the company, get things running. We don't need much money to start and then pick up. So initially first year, yes, bootstrap. And then we did the pre-seed round.
Okay, within a year of starting.
Within the year.
So in the first year with that 6-7 lakhs of savings, where all did you get to? Like, what did you do?
So we were able to get the first MVP done.
Okay, so the product was built. Okay.
The first version of the product was built. We had about 2,500 users on the platform. The platform was...
How did you get those first users?
I think the first is always we sharing it with our own network. I think LinkedIn was a major factor where I used to share it very aggressively about how we solve it, what we solve it, why you should, try out retirement planning, create a plan on yourself. So I think the first version was me sharing more content on LinkedIn and then how it picked up from 2,000 to 2,300 users on the platform, which picked up very naturally in a way.
When you say the platform, and obviously sort of the official journey starts on the sort of account opening, but I noticed on your website you have simple calculators.
Yeah.
So that's what you mean by retirement planning? Is that what people are using?
The first word.
MVP was that?
Yes. So MVP was a digital retirement plan where you choose any age, you choose anything, and it will gives you basically the numbers in a way. And was the first product. Second, we track down the PF. So tracking your PF digitally and seeing how much money is there, you need help on that. So because problem was to solve for retirement, right? NPS is one of the products in that umbrella, right? We wanted to solve retirement digitally, and PF was one of the very first and oldest product in that particular retirement vertical, right? We tried our hand there, and then we figured it out. It's not entirely digital. There's multiple failure rates, and then we picked up what else we can do. So it was a journey. Not from the day when we knew that yahi karna hai, right? We picked up. We decided we want to do this for a long period of time, and then picked up one thing.
Okay, so one was the calculator. Second was finding your lost APF account.
Yeah.
What else do you sort of put in the product?
The next thing was your NPS. So after
NPS, setting up the NPS account.
setting up the NPS account, tracking up your NPS account, making investments in that.
So this whole MVP was built in the first year. Shivam, that's what you did, right? Okay, with the money that you had. And then what you raised money? What did you raise money for? Like where did you need sort of staff for team building?
So we raised money to make sure that we get the first license done, which was for POP SE. There used to be a license called POP sub-entity. So you can work with the POP using that license. And again, there's a difference.
And who did you go to for the POP license?
So there were, at that time, there was only two active who were doing it. One was HDFC Pension as a POP and then ICICI Pension as a POP.
So these two large POPs were offering sub-licenses.
Sub-licenses, and that was regulated under PFRDA. PFRDA used to sign that whether you can get it or not. Later, they changed it to another thing whether you don't have to get a sign from us.
So when you decided to go get a license, who did you go with?
We go with ICICI Pension Fund
Okay.
at that time.
Okay. And you got started and you got 2,500 users. Then what did you decide to do?
In the second year, we started integrating with the CRAs. We used to work with both the CRAs, Protein. That time CAMS was not there. So Protein and then your FinTech. And we started rolling out features like open your NPS account, track your existing NPS account as well. So I think opening comes later. First, we rolled out tracking your NPS account, which is like if you already have NPS account, come see that. We'll help you enable and do that.
Yeah, and in initial phase, I remember some of the users came from Paytm.
I can't.
Yeah, so because there is some issue in the Paytm side, and I think one guy opened the account and other guys came by mouth, just by mouth. So at that time, I understand that there is a hook. There is a hook in the PF. After tracking a PF, we have 2 lakh users, and after basically we are pitching to them open NPS also. PF saving is not sufficient. Just add NPS in your retirement saving. So this is our
that happened in the second year.
yeah.
So our user base grew from 2,000 or 3,000 people to about 80,000 people in that year by end of like
Just word of mouth.
word of mouth.
I think
Also the
there is
PF
one
part.
video.
Yeah, we made a video
for
about
tracking a PF, which
Yeah.
went actually viral.
You made the video.
We made the video. It's a paper cut video. So we shot on our office. We shot the table saying that PF katta to hai, but jata kahan hai, and no one knows.
No one knows
It's the pension box, saying that you can see it here. It was like a 15 seconds video. And
Okay.
got about, let's say, 2.5 lakh views.
Oh, wow.
Got about, let's say, 10,000 sign-ups.
So I think in one day, like 8,000, 10,000 new users are coming. So this is how.
It picked up. So the one thing we picked up was tracking your PF and then adding NPS as additional saving, the B2C space. This is purely B2C what is happening. Third year again, the license change came in. So we got, last year itself, we got the POP SE license gone. And we have two options to go about it. Either apply for our own POP license. And that's where the whole show also aired. We were raising our seed round as well.
What show?
So there was a show on Amazon Prime called Mission Startup. We were one of the 10 startups who participated in that show. We were also one of the startups who went to the top 3.
How did that show come about? Like, how did you manage to get featured there?
They reached out to us. They were, for about a year, they were reaching out to startups, getting to know their journey. What are you building? What are not?
How did they find you even?
I think True Story was the one who were doing the screening process for it.
Who?
Your story, again?
Your story, yes. Your story.
Your
Sorry.
story. Yeah.
Your story.
And I'm saying no for 1 year. He's asking me that
For about
we
a year,
have
I
a
said
show.
like no.
Yeah, so I'm saying I just focus on the product, and I don't think it will be a great or something like that. So
Okay, then how did Rain Matter happen?
So 2021 is the entire year where I was alone into this. Shivam was working. I was looking at what can do, what licenses, what not. And by end of the 2021, which is November and December, we made a pitch to the pre-seed investors, knowing that if I have to get Shivam on board, get a couple of developers on board, I need more money to get it done. So we basically wanted to raise 50 lakhs so that Shivam comes on board. We have enough salaries for everyone. Get tech on board as well. Couple of people in.
basically, I wanted to build a good tech team. I know some experienced guys. So for that, we definitely need some cash.
Yeah, tech is costly in a way.
So then you pitched to.
Pitched to 5 investors. I just cold emailed everyone. Got like 4 meetings initially. 100x was one of them who were very positive from the very beginning.
So you got 4 meetings out of 5 cold emails.
Yes.
You know how great a success rate that is? That is amazing. That is amazing. Okay. Okay. And then so you pitched to these 4 people.
Correct. So at that point I pitched to everyone, like 4 of them. 4 of them came to be negative. One was already negative in the email side. 100x was very positive from the very beginning. The one thing I knew was that it was a post-COVID era in a way, right? So I wanted to go and meet them in person and make a pitch there instead of having on a Zoom call and do it, because it was my first pitch in a way. And I knew if they can see the passion behind you as a person, not on the Zoom, but in person, how much passionate you are about solving this, that can actually make a difference. So by end of that 2021, when we were like all the savings are depleting, I'm paying Nishit from my own savings 10,000 rupees every month as a stipend. At the end of that particular year, we actually traveled to Mumbai for the very first time, meet 100x, Sanjay Mehta, whole team, made the pitch and got the first pre-seed funding for about 1.2 crores.
Okay. Straight away you got 1.2 crores. That's amazing.
That's about in 1 month. So 2022 January, we had 1.2 crores with us. We had Shivam with us. We had a tech team who started building it. So 2022, everything started from full-fledged in a way. So that was the journey of a pre-seed. At the same time, when we did the pre-seed, 100x Yagnesh introduced us to Som, right? Dinesh in that way. So Rain Matter, we got connected to Rain Matter team. That time when we were very like 2,000 users, our MVPs was just simple. And that time, the feedback that I got was it's too tough to solve for this industry, right? No one has done it in the past. All the traditional guys are doing it in a way, but no one can really solve the retirement problem so far in the industry, right? And that was the feedback. And so I get little over saying that when someone rejects, obviously I never faced rejection in the employment of the life in a way. So when the Rain Matter team said, okay, it's very difficult for you to solve it, the comment I said was, you don't know it, I don't know it. The only way to know it is to execute it. So the only way to know whether I can solve it or not is to give it a try. So I'll give it a shot and we'll see, right, down the line. So that was the interaction we had with Rain Matter, the very first Rain Matter interaction. They said this.
And this is again in person. You went and met them.
No, this was Zoom meeting.
Okay.
This was Zoom in a way. And we were in Bangalore itself, right? But we did it over Zoom. Fast forward 2 years down the line, we met the Rain Matter team again. They come back saying that how come you guys are still existing in this particular space when no one else is doing, because in the last 2 years, no startup came in the pension space. Even now, if you look at any startup who's doing only pensions and retirement, you won't find anyone in this particular saying that I'll only solve for this, right? And the question came in, how come you guys are still solving this? Why are you not giving up yet? How can you building this? So we told them that we are very frugal in our way of doing it. Till we achieve a product market fit, till we actually see a very high stake up, we won't deploy our money to the sales team or to anything on that sort. We'll put our head down, we'll keep doing one thing at a time. And once we know there's a scalable process now, we'll put money in, build a sales team, scale further and build a sizable business there. And after that, within 3 days, I think I met Som, Rain Matter team on Friday. On Monday, I met Nitin. And on Tuesday, the round was closed from Rain Matter side. So it was very fast for...
How much did they give you?
So they gave us 3 crores. They initially offered to cover the whole round. But we said we already came up on a show called Mission Startup on Amazon Prime. There was a couple of investors who committed 2 crores. So out of our goodwill, we said we already said yes to 2 investors for 2 crore. Remaining 3 crore you can put in. So Rainmatter said we'll put in. We'll the lead investor.
So the whole round was how many?
5 crores.
5 CR.
5 CR.
Okay. Okay. So Rainmatter put in 3.
crores.
Okay. Okay.
And then
Did you raise the other 2?
no,
That didn't come through.
that didn't come through.
Okay. So now did you raise an extra 2 from Rainmatter or 3 is?
3 was enough.
So Rainmatter is one investor and 100x is the other investor.
Correct. And 100x and few angel investors as well.
Okay.
So these are the only on the cap tables.
And how big have you got to in terms of users, in terms of team?
So initially we did B2C. We see that this B2C is picking up. But again, as I said, a lot of consumer side is growing down because of the new tax regime and old tax regime change. And we have seen that in last 2 years, a lot of people who used to do NPS because of the tax savings are not doing it now. And I'll also say that in next couple of futures, if government does not bring that tax savings back, they will see the decrease in retail for sure in NPS. In that phase, we got about 1.7 lakh in the B2C side, and then we switched gear to B2B, which
1.7 lakh what?
is users. Sorry about that. So in that whole phase where we were expanding with the B2C, we got till 1.7 lakh users, and then we switched gear to B2B more because we saw that retail will go down the line because there's no incentive now for people to do it. And B2B is still the only benefit people get in new tax regime. So now there's a catch. So if a company does it for you, the same NPS, if a company does corporate NPS for you, you get the tax benefit even in new tax regime. But if an individual does it themselves, they don't get it. So the B2B model of corporate NPS, the model of NPS in a B2B side was the...
So when did you switch gears from?
Last year in June.
But the budget announcement only came now in Feb.
But even before that, they introduced new tax regime, right? Like last year also there was a new tax regime. That time also there was a down. This time we were expecting there was a down again, but this time it was impacted more.
So how many corporate clients do you have now?
So we have active contributing clients, which is about 35, which is actively doing every month on month basis. We deduct money from the salary and then send it to the NPS, and that's going on auto mode. So that's one. Second, we have more than 50 more that will onboard in next 2 months in a way.
They've committed already.
They are already committed.
When you say commit, what do they sign?
So they sign a MOU. They also sign a CHO form. So
What is the CHO form?
CHO form is basically the registration form for a company to get onboarded as a company to the NPS structure. So the 3-step process for company to get onboarded. One, they sign a CHO form. Second, they roll out to the employees. And third, they process contribution on month basis. And all these 3 things, right now, outside it's manual. HR has to prepare an Excel, send it to the POB, does this whole contribution through NEFT or not. We made the whole journey for the HR from the first stage to the end stage entirely digital.
So the CHO form is also
digital.
So, and these other 50, 60 companies that you're onboarding, they've already signed this form with you.
Yes.
Which means they're committed to
They committed to staying with us, and then we plan the rollout for the next 2 to...
Okay, say that again.
Okay, so
let me start again. So how do you make money?
we make about 2.5 lakhs MRR at the moment, and we will scale this up as we scale the company side. So this is majorly coming from the company side.
Okay. So after having raised 3 crores, right? Yeah. You are at the moment running at about 2.5 lakhs monthly revenue. Right. Okay. At this rate, how do you intend to scale?
So this is just from 35 to 40 companies that you work with. And this is only the last 5 months we switched to B2B now, right? SDFC have 2,500 companies they work with, and they make recurring revenue from them, right? And their revenue is much more.
How much revenue do they make?
I think they are break-even profitable on the POP side already, having 2,500 companies with them. The right numbers.
And I would have thought that HDFC has the might of the HDFC bank behind them, right? I mean,
that's a
they would be using the branches, no?
Not really. So HDFC banks are a different POP license, and HDFC pension fund is a different POP license. So both are different license holders, and basically it is a different entity. What we see is that in the last 6 months, from the engagement of 35 to 40 companies, we are able to make this amount of money. What we see is that in the next 3 years, we only do B2B more aggressively. In the next 3 years, we'll break the SDFC record of having the largest corporates with them, where our conversion rates are
They have 2,500 companies. You are going to close 100
in next 2 months. Yes.
next 2 months.
Yes.
From 100, you still have to go to 2,500.
And we'll get there in 3 years.
How many? Okay, 3 years. Okay,
Yeah.
giving yourself 3 years.
Yes. Reason being,
I mean, are there that many companies? I mean, do you think you will get the companies market share, as in like you get the companies from people who are already with other POPs, or do you think there are new companies that are?
so there are new companies as well, but in our backlog, there are 5 companies who will switch from these pension funds to us.
Why will they switch to you?
We are half the cost. They charge 400, we charge 200. They have a manual process for HRs to do it. We don't have to do anything on the manual side of things. The compliance has to be the extra. We take care of the compliance part as well. And HR work gets done, company is for free, and it's half of the cost.
And to what extent is it the fact that you're backed by Zerodha?
It helps build the trust for sure. Backing by Zerodha means a lot, because if you see, there's a lot of companies out there, right?
Okay, so therefore I'm saying, so to what extent? The answer is yes, right?
Yes,
Yeah. Okay.
it does.
So all these companies, not all, some of these companies that are with other POPs may switch to you because you're backed by Zerodha, you have a fully digital process
And we are half of their cost.
and half of the cost. Okay, so the journey that you built, the product that you built in terms of digital journeys, at least for employees, if not B2C, the employees of these corporates will definitely benefit. And what else do you have to do? Do you have to offer other things like the financial wellness seminars, webinars, whatever? You do some hand holding, which is not digital, right? You physically have to have people to go there and talk to them.
Correct.
Do you have to do that with every company?
So as I said, there are multiple companies who already signed up saying that the rollout will happen as per their liking. So let's say there is Orange County Resorts. They have 6 to 7 resorts in the south part of the India. And they're one of the good folks in the hospitality part. And they are one of the experiment in the first side. So we have already rolled out to their corporate office. We are rolling out to each of their resorts as well. And that requires certain set of planning and going in presence, taking care of a couple of things, talking to people. So we take time for rollouts. We plan it with the companies all together, but the execution part first happens digitally. For the rollouts, we do make sure that there are people they can interact with, there are people they can trust, there are people who can tell them not to pick one.
Who are these people? How many staff do you have?
So we have about 32. Out of that, 16 people work in this particular part and 14 people work in the tech side.
So roughly half and half in terms of tech and we call them sales or customer success.
Success and sales both.
Right. Okay. And they sit right here in this office.
They sit right here, there. And that whole tech team is remote.
Okay. Okay.
And this is I think the second time Shivam has come to office.
Fine.
The second time.
Yeah, but he does not have even an ID card for the office.
Acha. Okay. Okay. This show is sort of from scratch because we wanted to hear from sort of the issues that you save. But I must say, your journey sounds amazing in that you wrote 5 cold emails, got 4 responses, check within the first year. It sounds amazing. What other issues did you face that you think is worth sharing with other founders?
I think when you're building something in FinTech, regulatory is the major one. You have to look for the regulatory risk. You can't ignore that for sure. Building something at a lower cost is another one because your CAC is too high for a B2C or a B2B in a way. So how do you minimize the cost of your operations is the second challenge. You have to find people, train them well enough because if every one of you see here is trained from scratch. They do not anything about pension or retirement space. Within 15 days, we teach them domain, teach them everything on the part. So there has to be more work to be put in the initial.
Also, basically, we have to be patient. Patient in the sense you are working with NHDL or some other. So one email reply will come in one month.
Yeah. So things move slow. Very slow.
Means in 3 months you have to wait for every issue which you face, right? The resolution of that come in 2 months or 3 months. You are just sitting, just waiting. So these are.
So what do you do in the time that you don't get a response?
We basically prepare the APIs and with the mock response. Mock response we.
So you assume that they will say yes and therefore.
Yeah. So
we did it with the test data.
Yeah.
So we have done everything and they are also surprised how you have done it in 10 days once we given the API because we already prepared it. 90% we already prepared it. So this is how we work.
But I think the 3 major challenges. One is regulatory. Anytime the regulation change, you have to be up for it. you have to take the next steps in a way.
Right.
There'll be people in your journey who will be with you when the things are right. So when the Amazon Prime show came in, we had investors who were backing us, but the day regulatory change hit, they backed out, right? So you might need to find people who will believe in you, even if those things happen and they believe in you because you will do it the next.
Is it a question of believing? I mean, are they being pragmatic because they will start a business with a certain regulatory environment, and if the regulation has changed, the business case has changed. So they're not wrong to sort of.
I think it's not wrong or right. It's more like, do you understand the fintech space appetite or not? Because if you are in a fintech space, you will understand whether the regulation change, you will cope up with it and move forward, right? If you come from a D2C brand and you compare D2C versus fintech, there's a two different ball game altogether.
So the moral of the story is, don't take money from people who have no experience in fintech.
Correct. If you are building a fintech,
Right.
Definitely.
they'll question you in each of
This
these
is the
steps.
second thing. And what is the third thing?
Third thing is basically you have to keep your expenses low as much as you can, irrespective of you raise $1 million or a crore. You still have to burn as low as you can to make sure you go for a longer period of time. Your runway is much higher. So when we thought about building this, we were like, boss, एक अच्छी company बनाने में 8 साल लगते हैं. Right? If you judge the company with the first year only, you will see this going nowhere. Second year, things change from 2,000 people to about 80,000 people. Third year, something else happened. We started B2B. Even if now, things look like कि B2B में 30-40 companies ही तो हैं, right? What difference does it make? 1 year forward to this, when we look back to this particular day, we'll see, okay, you are sitting on 1,000 companies. How did this happen? Because you have to make sure that your runway is too long to try out. You have to be alive to see the day tomorrow, right? So I feel low expenses and just keep moving forward with the right intent helps you win the long run.
You're still obviously bullish on your company, but are there any other players that have attempted pension at all? Do you have competitors?
There is a PensionBox, very seasoned guy who have,
Uttam Bharadwaj.
yeah, definitely for sure. I keep following him as well. I keep seeing him.
But he's in micro pensions, right?
Yeah. So, but he did try out his hands on pension as well. He tied up with SGFC. When we started off, he tied up with SGFC and raised about $1 million in India. Did about WhatsApp, NPS account through WhatsApp kind of a journey. Not the tech, but like WhatsApp, so you open up your NPS account in something. That was one. I think they're not active yet after the first year.
So what did you learn from their story?
I think it's not about
Build your own journey.
how much you have learned in the particular space. There is more to be done. So what I feel is that he's a very seasoned guy. He knows everything in and out. He knows every government person out there. And it's not important me to be him to solve for this problem. It's very different ball game altogether.
The learning is that you don't have to be as seasoned in one industry.
Yeah.
You had no experience and yet you have built.
You don't have to be seasoned, but you have to be persistent in a way.
Right.
So it doesn't matter who have done what. Forget about everything. Just put our head down and keep doing what you do. Time will tell whether this is working or not. And the only way, I always tell this, the only way to know is through execution. If I can make it happen, then people will say, yeah, this was a good business model, it worked out. But it will eventually work out when you keep doing it for a longer period of time. And still we feel that 3 years already gone. Within 5 years, someone has to build the pension industry and has to be the person who does what Zerodha did to securities. Someone has to do with pension, right? Even if for the people who are near retirement or so. And we truly believe that tomorrow if someone else came and do it, you are more than welcome to do it. But we will follow our journey and keep doing what we do and figure out one thing at a time and move forward from there.
Right. So means I always say speed and accuracy are inversely proportional, because if you have speed, somewhere you're lagging about accuracy. So in my team also, I always say, if you make this equation wrong, then definitely we can deliver a product as soon as possible. So yeah, this is the thing which my team also do, because I always hire 1 year or 2 year guy experience, because earlier I have made a mistake. I hired some,
One other thing that I have to ask you, what is it like to work with your older brother?
Sometimes we get into very different arguments, very different. So we have drawn a line that this is the line, you don't come into the tech side because on the product side, and I will not come into the sales or marketing side.
But he's a CEO, right? Even
I come everywhere eventually.
So he definitely going to ping me in the tech or everywhere. So, but I have to be patient. I don't lose my cool. So this is the thing.
but it hasn't affected your relationship as siblings?
No, see,
So we have been fighting not just here. We have been fighting since the child.
adult. So
So it's not the first time we are fighting for something. But one thing which we are good at is like even if we fight and people feel like they have an argument, in the second time we are having dinner together or lunch together.
So communication is the key. In any fight, communication is the key, which I actually believe in. Whatever.
And we take a step back also. Like let's say he is fired up and okay, okay.
Yeah. So after angry, we actually analyze whose mistake is that. If my mistake, I will say sorry, and the case is closed. And if his mistake, he will say sorry. So this is how the mutual.
But we fight, no doubt about it. Building with brothers I think is a good thing to have because you have been fighting for so long. Now you're fighting for something you truly believe in.
And mutual respect is the main.
Yeah.
I have a respect for his job, and he has respect for me.
I think no one can build better tech than Shivam in the whole company.
And
Guy there.
and no one can do pitch better than Kuldeep. So this is
This is a mutual admiration society.
my society.
Right. Okay.
Okay, on that note, thank you very much for making the time. Thank you also for joining me for this episode of From Scratch. Hopefully, I'll see you next time.